Good afternoon, Hedgeye Nation. This is Sector Head Spotlight. You've got Robert McGroarty here, Director of Subscriber Development, and I have the pleasure of sitting down with Todd Jordan, the Sector Head for Gaming, Lodging, and Leisure, otherwise known as GLL. He is one of the original three, kind of like from a hockey standpoint, the original six. We've got the original three.
Yep.
I've sat down with all three of them. All three of them, Penny, McGough, and now you, Todd. So thank you very much for joining us today and walking through your process and everything that goes into the GLL sector.
Yeah, thanks for hosting.
Absolutely.
Appreciate it.
Absolutely. So with that, I mean, from a format standpoint, for anybody who's listening in for the first time, these are really to kind of get to know our sector heads better. So running through a little bit about their background. Certainly for Todd, it goes all the way back to 2008 in terms of when, as I said, kind of one of the original three sector heads to join, in addition to Keith, and then rotating into their process, some of the data that they use, how they manage their coverage list, and then rotating into some key themes for 2023. So with that, Todd, maybe you can just walk us back to the early days of Hedgeye and what that looked like, how you kind of came to get to know Keith,
Sure.
and then how that came about.
Yeah. So I had known Keith since the early 2000s. He was actually a client of mine.
Okay.
He was at a hedge fund, and I was working on the sell side. And even when I went over to the buy side, we stayed in touch and shared stock ideas, and actually remember going to a Vegas trip with him once. For business, of course, which was great. And then he, came to me with this idea to start up Hedgeye. At that time, it was Research Edge, and we both agreed that there was a dearth of, good sell side research out there. So there was a big opportunity there, and we knew we could do really well with the institutional right away. But the real icing on the cake was bringing our research, our Wall Street quality research. New wall, not old, to the mass market, right?
Yeah.
And that has really come to fruition.
Sure.
It took a while, but
Yeah.
but we're here. So I joined in early 2008, which was a great time because by the time we got our research rolling, mid to late 2008, I was negative on GLL from a bottoms up perspective, and Keith was negative
from
top down.
Yep.
And it melded perfectly because you had the great financial crisis. I mean, a lot of people lost their jobs and stuff like that. So, but I'm just saying from our startup potential and getting our name out there, it was good timing.
Mm-hmm.
We ended up being right, and I still remember the early days of giving out my research for free. And it was all negative, and I'm sending it to these big, long-only mutual fund companies. Just pissed people off left and right. But it was you had to take that, right? I mean, you gotta have thick skin in this business. But it worked out pretty well. Here we are. It's the longest tenure I've ever had in a job by far.
I can imagine. And when I was speaking with Howard, I told you this beforehand, but Howard mentioned that basically, the call, which for anybody who's listening in and gets has access to the call, the back in the day it was just you three or you four with Keith in the room, and it would go Howard, Todd, Brian McGough.
Yeah.
And then as analysts kind of came in, Tobin got at it, and so on and so forth, Steiner, et cetera, et cetera.
Yeah.
But I love that Keith kind of keeps it in that very repetitive manner. It speaks a lot to kind of who he is in terms of going back to regimented, right? Like the
it was. I remember those days fondly. It was we didn't have a sales force at all,
right?
So we'd sit in the room, like 4 or 5 of us, and we had these awesome chairs that are kind of like reclined, and we would just talk. It was just so informal, but here's what's going on, and then how do we what's going on in restaurants? Is that I found out that wow, there's a correlation between casual dining same store sales and what's going on in regional casinos.
Interesting.
Which was really cool, and I would have known that if I hadn't have talked to Howard and then figured that out and started doing the math on it. But yeah, it was an interesting time. It was tough because we were trying to build a business, and we had to really sell ourselves. Because we didn't have a sales force, so we were doing 2 jobs at least, which was challenging, but it was really fun. I mean, it just when you believe in the idea, right, and then you're willing to do the work to get there because
totally.
you're so entrenched in that idea of
Yeah.
democratization of Wall Street, which was I mean we're in the finance business and we take a lot of heat, right, for just caring about money, but there was a altruistic idea here too, and that was to bring high quality research to the mass market. So
Yeah.
it was always something we believed in, and we still do.
Absolutely, absolutely, and yeah, with that, maybe we pivot a little bit to the process where you commented about like Howard and sort of getting those ideas from other sector heads.
Yep.
Before we go there, though, I think it's very telling that many of our sector heads did wear those two hats from a kind of like sales perspective as well as research, because not many do. Right? It takes kind of, as you said, you got to be thick-skinned because you get a lot of no's. Doors kind of get open just a smidgen, and you have to take that opportunity on. Anyway, but that could be a conversation for another day. But from a process standpoint, Genron, if you don't mind, we can maybe put up that slide from slide 3. It is perfect, and Todd can maybe walk us through some of how you guys handle it versus street.
Sure. Yeah. Keith's big on the triangles.
Mm-hmm.
So we have the triangles up here. I mean, and look, we don't get paid unless we differentiate ourselves from the street, right? So I think we have to have a better process. And our process has evolved over time, and I'll give you an example. Like we've always worked in the macro, which virtually no analysts on the street do. We've worked that into our process, and just as an example of that, early on, when I'd never looked at macro factors at all, right? What drives my individual stocks, and with working with Keith, I really got into it, and I was like, all right, what really drives casino revenues? And what we found was really interesting. This really helped with our negative call, was that we found out of all the macro variables, right? So you take every individual gaming casino market in the country, and you look at the local economics, so unemployment, GDP growth, housing prices, a lot of factors. I had like 20 different factors, and then I ran all these regressions, and I found that in 14 out of the 15 markets, housing prices were actually the number one driver
Really?
of casino
I mean,
revenues.
it makes sense, but that's
And this was the perfect timing to figure that out, because
Right.
this was 2008, and
Yeah.
housing prices had already started to drop. And so we were really negative, before the stocks had dropped, and that was the big reason. So, thanks to Keith for getting me into that, because, that was just a huge part of the call, right? I mean, that was
Absolutely.
the probably single driver of that call, and we continue to work these macro factors into our modeling. But, having said that, in terms of what we do now, so we've evolved to, okay, we still do all the macro stuff. We still, do typical sell side stuff. We still have models on the companies and all that stuff, but we've worked in data in a big way into our process. So both the procuring like in-house data, for instance, I had a guy walking the casino floors in Macau every single day reporting on, where is the minimum bet levels? How many people are playing on the tables every single day at the same time? What is the average bet? All the stuff, and worked it into a model that actually is very predictive of mass revenues in Macau. So that's one data point.
Eric.
that
If you
we
pull
put in.
up slide 4, that's got a lot of that content on it.
Yeah.
Yeah, perfect.
We track forward room rates in 25 markets, hotel markets, right? So we're looking at where our ADR's going. We've got an Airbnb database, which we've been doing for 7 years, even before they were public,
Really?
where we actually track listings growth in every single market in the world.
Wow.
Right, and we do that because we care about the alternative accommodation business. Expedia has a big alternative
Yep.
accommodation business. Airbnb obviously now is public, but it also impacts traditional room
Like hotels.
RevPAR,
Yeah.
revenue per available room, because the more supply you have on the alternative accommodation side, the more Airbnbs, the more Verbos, that has an impact on what people are going to pay at hotels. It's competition, right? So it's another example of some in-house research or proprietary data that we have. But we also take into account a lot of like third-party data that's publicly available, but we work it into our models with some of our independent data, and we're looking at what has predictive value. We're always looking for correlations. We're looking for drivers of the business, whether it's hotels, OTAs, cruise line pricing. We have a 35,000 itineraries we track over the next 18 months. We look at where cruise pricing is going
Wow.
by brand. And we do it on a weekly basis, and we look at moving averages, and it gives us inflection points, whether it's, Carnival starting to outperform, or, the industry in the Caribbean's getting better,
Right.
or, Europe struggling, whatever it is. So
Yep.
all this stuff is part of our process. We also, we talk to companies, we try to get a
Yeah.
feel. We have contacts. I mean, I've been in this business for forever, and so I've developed a lot of contacts in the business, and that gives me contacts and context, if you will, which helps in our process as
Yeah.
well.
Yeah, that's awesome. And so from that, like, how do you kind of take some of that proprietary information and then really get it into the models, or kind of,
Yeah.
because some of that's like a bit thematic.
Yep.
So then when you're analyzing the individual companies, what are some of the kind of, I guess, metrics or key things that you're paying attention to in terms of, okay, like if we're seeing, Carnival Cruise Lines itineraries like pick up, or and that kind of thing, what's the kind of like lead lag on that, from like showing up in your data versus actually showing up in either the numbers,
Yep.
and then secondly into, say, the signal or the actual stock outperformance.
Yeah, I mean, I have a statistical background. I got
Okay.
my MBA from University of Chicago, which is very quant
Yeah.
business school, and we're running regressions all the time, right? So we're trying to look at whether it's the data that we procure independently or third-party data. We're trying to figure out what's predictive of
Okay.
of the future across really all our subsectors
Okay.
that I mentioned already. And the important thing is, we everything has to be quantified. So I have to like back test everything, right? So I say but my
team. Yeah. It's all about the team here at
the
Hedgeye.
output and
Yeah.
take credit if it works, right? That's my job. So no, we're looking at what has predictive value, and we back test everything, right? So we're not going to just say, theoretically this should mean this, or an uptick in this metric should mean that future RevPAR is going to go up. No, it's got to be actually proven. And the key is to figure out what are the variables that are statistically significant, because you could have GDP and unemployment in your model, right? But if you just use one variable and you look at GDP, it's going to be positively correlated, right? But maybe unemployment actually matters more. So you
Right.
got to have them both into your. So there's a lot of iterations of,
Sure.
of modeling, trying to figure out, and it's always changing. You can't just rely on something you did 5 years ago.
Right.
You got to, because everything changes. Like
Yeah.
Keith's process, like
Yeah.
his risk ranges are changing, by the minute,
Yeah.
right?
Yeah. Very dynamic.
And
Yep.
we're not running regressions that frequently, but still it's important to keep figuring out what works, because things change over time.
Yeah. And then from a coverage list standpoint, how does that kind of, if you're running those regressions frequently, how does that influence then your coverage list?
Yeah, I mean, it's just one part of the process, but usually if I see a correlation with a certain metric, like say the Las Vegas locals market, right, where people live and they gamble. Let's say I see an uptick in I saw an uptick in housing, right? I know that's such an important driver. Okay, well, who's going to benefit from that? Oh, Red Rock.
Sure.
RRR, triple R. That's something I'll look at. But that's just one part of the process. I mean, we're I like to try to figure out, and this helps to talk to. I mean, we're in a nice position where we can talk to a lot of different people on the institutional side,
Sure.
right? And half my clients are long onlys. The other half are hedge funds, and within that hedge fund, maybe half of those are fast money guys. The
Right.
other half are more longer term,
Yep.
kind of thoughtful investors. So I get this mosaic of
Perspectives.
input,
Yeah.
right? Yeah.
Yep.
So, and I'm trying to figure out what the street's thinking on things, right? Because if I can think that the Las Vegas Strip is going to do really well, but if everybody else thinks that too,
It's not much of an edge.
it's not much of an edge,
Yeah.
right? So, in that example, like that's probably true right now, but I don't think people are bullish enough, right?
Got it.
So I'm always trying to figure out what the contrarian side is, and it's also look for you also want to search for disconfirming evidence too, right? So it helps to have that feedback, because if I'm long something or I'm recommending a long, I want to know what the short side is. Right? What's the short call on that? Or vice versa, and that's really important. And if I can refute it, then I'm in a good spot.
Yeah. So along those lines, from macro, because we've recently gone bullish on China and China related kind of equities or exposure. I know LVS got recently put on to Investing Ideas from Keith, along with another name of yours, but
Melco, yeah.
yeah, Melco. And so I didn't want to give the whole store away, Todd, but that's okay. But yeah, so how does Because on the call, I hear you talk a lot about kind of your Macau data. Certainly on Monday mornings, I believe it rolls in. But how do you? Again, you've kind of already touched base a little bit on the macro, but what are some of the things that you've seen or that you're picking up? Because I've noticed you're certainly talking a lot more recently
Yeah.
on the Macau and the data that's shifting more positively. So how does that kind of influence your long list,
Yeah.
LVS and Melco are both on there, but they're on the kind of long bias.
Right.
So is there anything there that kind of you're waiting to sort of really get more, I won't say aggressive, but a bit more conviction, I guess, or kind of moving it up the chain? Or how do you think about that in terms of moving things from kind of a neutral territory to long bias to your active best idea longs?
Yeah. I mean, generally speaking, we have most of our best ideas are stocks that we like for the near term and long term, right? Whereas long bias will be, and this isn't all the time, but long bias will be, stocks where maybe we like over the short term but not the long term,
Okay.
or vice versa, right? And the issue with Macau we have is long term. Like it's just that we don't know what the Chinese government's ultimate stance is on Macau. They don't
Sure.
like gambling, right? And I don't know if they're going to let Macau get back to what it was pre-COVID at this point, right? I think they want to turn it into a tourist only kind of casino market. They'll let anybody in to do anything else, but
Sure.
and I don't know that for sure. I mean, it's just reading the tea leaves, right? With
Yep.
some of the management departures and some of the comments they've made, and the forcing the companies to make
Yep.
more non-gaming investment and stuff like that, and giving them a tax break for gambling done by foreigners versus mainland Chinese. But having said that, we turned positive on Macau maybe 3 or 4 months ago, just because the sequential momentum is there, and we think the numbers over the near term are going to, actually outperform what the street's looking for, and we still feel that way. So we're still going to be positive on it.
Yeah. Yeah, so for those listening in, again, this is a free webcast, but when you're combining kind of conversations like this with Todd to the call, this is where you can pick up on key points from again, on the call, every sector head really only gets about 5-ish minutes, maybe not McGough, but but in general, I remember, I think was it the MGM head at Macau, or was it Win that left?
Yeah, the two win guys.
Two win guys,
Yeah,
right?
two win
Yeah,
guys
so
left, yep.
two really
Key
kind of
guys,
key
really smart
guys,
guys, too.
right, from Macau, which is something that I hadn't thought about in a while. But when you mentioned that recently in terms of management teams leaving or saying adios to the Macau market after being there and seeing it as a ripe opportunity, I mean, you don't move from Vegas to or wherever they were to Macau for just for an average opportunity, right? So
but it's fun to get back into Macau because with COVID and everything, the market was just shut down to almost shut down for 3 years, and they're finally they just said screw it. Now they're opening up to everything. So it's good to have like a call again on that subsector, which was huge for us prior to COVID.
Yeah. No, awesome. Yeah, I was so before again for anybody who's new, I was a subscriber before joining Hedgeye and wearing the jersey, and LVS was a great winner for me back in 2001, I guess, 2020. I can't remember, but basically LVS. We were long LVS for a while, and it really worked out well.
Awesome.
So thank you. Before maybe moving into themes, is there anything else from like a position monitor standpoint that you want to touch on in terms of I noticed you use Switzerland as neutral, which I really love, by the way, but anything on the short side?
No, I mean, look, we don't like the hotel segment.
Yep.
And we do like the casino segment, generally speaking, and then the other names are kind of here and there.
Sure.
Right. But in terms of key themes, it'd be like pro gaming and anti hotels, and it's actually a good hedge too. I think it's a good pair trade, I should say. If you're worried about the economy, right, or you're worried about Quad 4, using the hotels as a hedge to like a long MGM, I think makes a ton of sense right now.
Awesome. So from would you classify that as kind of like one of a few key themes then for 2023?
Yeah. I mean, the Strip. I like gaming overall. I think the regional, but it's different. Like the Strip, I think we're in a spot where so Caesars and MGM's our big horse.
Yep.
I think numbers are going to go a lot higher. Regional gaming.
Sorry, Todd. General, can you pull up slide 8 by any chance? Sorry, buddy.
No problem. Regional gaming, I think, is in a situation where I just think the cash flows are just way undervalued. I don't see a ton of upside to the numbers right now. over the near term at least. I think there's numbers upside to numbers in 24. But the strip, you got both. I think the cash flows are undervalued, and you've got you've got the potential for numbers going way up. I mean, I'll just give you one stat, and actually the best part of Las Vegas is the hotel market, and it's like night and day versus the rest of the country in terms of what's going on, the dynamics.
Okay.
But just to give you one stat, so the street's got RevPAR, which is revenue per available room. It's basically room rate times occupancy.
Okay.
They've got strip RevPAR up maybe like 3 to 5% in 2023 versus 2022. If you just take fourth quarter RevPAR, actual RevPAR, seasonally adjusted throughout the year for 2023, RevPAR will grow 17%.
Wow.
That shows you how low the street is. Now, there might be some pushes and pulls. You might say, okay, well, those crazy room rates they had in 2022 are not sustainable. Okay, fine. But then you've got the convention business coming back for a full year. You've got, the Omicron impact was last year. That's gone. You've got incredible event calendar. Vegas is really driven by events. F1 is going to be just monstrous. Yep. It's going to impact by a few percentage points annual RevPAR just from that weekend alone. That's how big that's going to be. Yeah. So the event calendar is fantastic. And, if you just look at the hotel market, like we're positive across the country on the group and convention business, right, which would benefit all hotels, particularly those in leisure destinations, right, which are gaining share. Vegas is certainly on there. But our problem in 2019 with Vegas is that we knew the convention demand was there because the room product's better. It's Vegas. And rooms are bigger, they're nicer, newer. But they didn't have the capacity. They were running at full capacity in terms of the convention and group room supply or meeting supply. So fast forward, during COVID, they built all this additional convention facilities and stuff like that. So now supply's up like 20 to 25%. So all that incremental demand is actually playing through right now. And that's without a commensurate increase in room supply.
Okay.
So that means you have the same amount of rooms pretty much and all this additional convention and group meeting space, which is going to translate into a lot of room compression, room rate compression, which means room rates are going up. And Vegas is always fills their weekend nights, but during the week, it's a little bit of a struggle. So the fact that the convention is coming back and growing and stealing share is going to be huge for room rate growth in 2000 and occupancy growth for 2023. Awesome. So that's Vegas. And then the problem with the hotels is they've got too much business transient exposure, right? Business transient would be me flying to San Francisco to go meet with clients, right? Versus group and convention travel. Or leisure travel, right? Those are really the three components. We're positive on leisure travel, we're positive on group or convention, we're very negative on business transient. And all forward indicators are suggesting that not only is business transient not caught up to 2019 levels, it's actually getting worse. And if the economy goes south, that's going to be, because balance sheets are tight, and the income is also under pressure here, especially with labor inflation and cost inflation and things of that nature. So it's very easy for companies to just pull the plug on business travel, whereas convention and group is kind of like this pent up demand. Right? So and Zoom works, right? I just did a call with a client on Zoom. It's great, So my travel's cut in half. I'm not going to be traveling as much. So that's bad for the hotel REITs. So the real estate investment trusts that own a lot of these hotels, which we don't like Pebblebrook and Park, because they've got too much exposure to business transient. That's the top line problem. The bottom line problem is these guys benefited from just crazy high resort ADRs in 2022, which aren't going to repeat. So they just way over earned, right? And their staffing is like 75% of what it was in 2018. But when you have all this group and convention business coming back, these people are going to want the bar to be open. They're going to want the restaurants to be open. They're going to want room service. They're going to want turn down service and all this stuff. So staffing is going to have to go up. So we see a lot of margin compression with the traditional hotel REITs. And that's going to be a big problem, especially since they're way over levered. You're talking about like Pebblebrook at 5.5, 6 times leverage, right? That means when things start to go south, you get a oversized impact on the stock price.
Is there any credit risk there? Do they have any debt?
They're in pretty good shape. I mean, I think you would need just a pretty deep recession.
Sure.
But what I think, if we go into a recession,
I mean, the 2 points you made are enough to compress the stock, but I just was curious. Yeah.
No, it's a good question. I mean, they've done a pretty good job with their debt. They're actually Pebblebrook's not a badly managed company. They're just in a bad spot because they went into 2019 with too much leverage, or 2020 with too much leverage, and obviously COVID, hurt cash flows for good 18 months or so.
Sure. Yeah. Yeah, we won't use my. I'm an anomaly on the Marriott travel. But on that note, anecdotally, the restaurant at the Marriott here in Stanford, which is where I typically stay when I come to the office, there's one bartender, there's one server.
Yeah.
My room. I have to request to get it's the room cleaned.
Yeah.
Which again, typically,
Which is like a
which
pain
is
in the.
correct.
You think it's not that big of a deal, but man, there's nothing like after a bunch of meetings. I've gone to San Francisco to meet with clients, or Boston especially, because it's like packing 7 or 8 meetings a day. And I go to I get back to the hotel. I either want to go to the bar for a drink,
Correct.
or I want to just go to my room and just veg and have room service. And when you walk in and your room's still messy from the day before, it's because you forgot to call.
Yeah, exactly. It's
Late,
so
right?
annoying. It's so annoying.
And here's how I think some things are going to play through here, right? So with people traveling less, I mean, you accumulate your points on these loyalty programs, mostly by business travel, right? So with me traveling half as much as I used to, and other people I'm sure are in the same boat, like my need to stay within my hotel system, your Marriott system or whatever, is less, because I'm never going to get that high status again, right? So I'm more apt to go for choice. So instead of having to stay at an intercontinental property, I might want to stay at a property that's a little closer, or that has its amenities already, that has the bar open, that has the hotel or the restaurant open. And in that case, I'm more willing to move outside my system, right?
Sure.
Which, by the way, actually helps the OTAs.
Yep.
Which, I think that brand loyalty was such a big tailwind for the brand companies like Marriott and Hilton and Hyatt, against the OTAs. And now with people wanting choice more, and now the loyalty programs for the OTAs actually building up, I think there's more.
Expedia's got a good one.
Yeah, more potential for people to use the OTAs more often, which also means lower margins for the hotel REITs, the hotel owners, because they have to pay that take rate to the OTA when a booking is done through the OTA.
Yeah. Awesome. Well, that's a pretty good theme for 2023. Anything else on your mind? I mean, I know we already talked about China, but from on the short side, we kind of covered both. So, Todd, you're the man.
Thanks, bud.
Thanks, bud.
Appreciate it.
Thank you for everybody at home for tuning in. If you're interested on learning more about the GLL sector with Todd Jordan and his team, you can go visit Hedgeye Products and go subscribe to the Sector Pro product there. It's called GLL Pro. And with that, I think we're going to wrap it up. For anybody interested, we've got Hedgeye Live coming May 4th to the 6th here in Stanford. Again, with that ticket, you get to sit down with a bunch of different sector heads, but in particular on Saturday morning, you have 2 or 3 sessions with various sector heads of your choice, where you can get to ask conversations, have one-on-ones and discussions like this, like I just had with Todd, and for all those other wonderful sector heads, which you can go review our YouTube playlist and go check that out. So with that, we'll see you next week. I think I'm going to have Felix weighing on from China, but it might be Jay Van Scaver. So TBD, but we'll see you guys next week on Thursday. So cheers. Thanks, guys.